Hello guys, Swaraj here, and today's topic is the importance of stop loss. I have often heard people saying that for long-term investment stop loss is not important. What people think is that you buy a stock, you keep it in your account and it will the price will rise over the time. This is what they think about long-term investing. बस स्टॉक खरीद लो, अपने अकाउंट में रख दो और उसका प्राइस बढ़ जाएगा. They try to copy the Warren Buffett strategy. It works, it's a good strategy, but it doesn't work always. Look at stocks like Paytm. Since the listing, it is down more than 40%. Look at Yes Bank, down more than 90%. DHFL, the company itself doesn't exist now. So India Bull Housing, down more than 70% from its high. Look at Vodafone Idea, more than 90% of value gone. India Mart is a good company, but still it has lost more than 40% just this year. So, if a stock is falling more than 30% within a year, there might be three reasons. Either there is something very wrong with the company. Either the company is in huge loss or there is some fraud like Yes Bank. So, second, there is something wrong with the stock market. The economy is falling, so probably the stock market is also falling, or the stock market is overvalued. Third reason, you have bought the stock at a very wrong time. That means probably you bought the stock at the highest possible price. So if a stock falls more than 30% within a year, there is always a chance that it will fall even further. So stop loss is very, very important. Stop loss is important in long-term investing, short-term investing, and very, very important in trading. So people say, in long-term investing, why should you keep a stop loss? That is wrong. Say suppose you bought a stock at 100 rupees and it is down to 70 rupees and it keeps on falling. And if you didn't keep a stop loss, you're stuck in a loss-making stock forever. There are more than 3,000 companies listed on the stock exchange. And there are easily 500 companies which are very good, and out of which there are at least 100 companies which are in uptrend. So why should you be stuck in a loss-making stock? You should be very emotionless while investing or trading. If a stock is falling below your stop loss, you should exit it and look for other good opportunities, because you can always recover your 30% or 20% loss. But if the loss goes to 70-80% or more or even more than 50%, it becomes very difficult to recover, because you will be left with very less capital. Often investors and traders make a very huge mistake. What they do is they take the profit very quickly and they hold on to a loss-making investment or a trade for a very long time. And holding on to a loss-making investment or trade for a very long time usually results into huge losses. It should be reverse. You should hold on to a profit-making trade or an investment for a very long time, and you should exit a loss-making trade at a very small stop loss. In that ways, you will always remain profitable in the stock market, and even if you lose money, you will lose only less money. So what should be the ideal stop loss? So ideal stop loss which I follow, and because of that my losses are always less and I try to maximize my profit. So the ideal stop loss which I follow is at least 20 to 30% of the buying price. What happens is that if a stock falls more than 20 to 30% within a year, there is always a chance it will fall even further. So stop loss of 20 to 30% is very, very important, and I wish that everyone feeds this, embeds this in your mind. 20% या 30% से लॉस होने लगा तो वो स्टॉक निकाल दो. In 2021-22, the all markets are all at all-time high. The valuations are very high. आपने अगर कोई PE वो सब चेक किया होगा, so you will start seeing that the valuations are at all-time high, and already the markets are falling. and already many of the stocks are also falling. I can easily see that many of the long-term and short-term portfolios are down more than 20 to 30% as of date. And if you don't keep a stop loss at this point of time, you would probably suffer even more losses, because there is a potential that the markets can go down even further. So keep this in your mind, that even in long-term investing, stop loss is very important, because rather than holding a stock for long-term, right timing is very important. At what time, कब आप स्टॉक खरीदते हो? अगर आपने स्टॉक हाई, मार्केट जब हाई था तब खरीदा, तो शायद जब वो गिरेगा, you will be in a loss and you might get stuck in a stock forever. There is always a chance. There is another method which you can use to maximize your returns and minimize your losses by using stop loss. It is called trailing stop loss method. So what is trailing stop loss? For example, you buy a stock XYZ at 100 rupees, and now you are keeping a 20% stop loss at 80 rupees. Right? You have bought at 100 rupees and you're keeping a stop loss at 80 rupees. Now what happens, say suppose you got everything correct, the timing was correct, the stock was correct, the market is also helping you, so the stock rises to 120. So what you should do now, you should increase your stop loss also to 100. So if it falls from 120 to below 100, then you should be emotionless and exit the stock at 100, you're not losing any money. Say suppose it further rises to 140, you should increase your stop loss to 120. It rises to 160, you should increase your stop loss to 140. So 160, if it comes down to 140 and you book your loss, your stop loss, but you are in still 40 rupees profit. In this way, you will be able to maximize your gain and limit your losses. And in that ways, you are always in profit in the market. The next thing that you should remember is the timing at which you buy. Now timing is very difficult. Nobody can predict which is the correct time to buy. But you can always use a combination of charts and graphs and chart patterns to recognize the timing to buy. Okay. So we at Finaware, we have developed a model in which you can reach to a little bit of perfection you can reach in this timing part. Okay, the timing to buy, the timing of stop loss, and when to exit and when to enter. Even in a falling market or in a bearish market, there are always some stocks which will rise. How to recognize this stock? So we at Finaware, we have developed a trading model which will ensure that you're always in profit. Even if you make a loss, the losses will be minimum. This model involves a combination of chart patterns, graphs, then thumb rules of things to do, things not to do, then various kinds of strategies and various kind of conditions of the markets which you can recognize. All these things we bring to you in form of a training course. The fees of this training course is only 15,000 rupees. In this training course, we'll cover balance sheet analysis, business model analysis of a company, then technical analysis, fundamental analysis, and all the other basic fundamentals which you require to function in a market. This is almost like a mini MBA. Once you take this course, you will be proficient enough to do delivery based trading for long term and short term, and you will never ever in life suffer huge losses. Even if you suffer losses, we'll teach you techniques in which even if you suffer losses, you take only minimum loss, but when you take gains, you will be able to maximize your gains. So this is only one time you will have to pay a fee of 15,000 in your life, but you will be able to gain a lot of things, a lot of knowledge from this course, and you will be able to maximize your returns. So do not miss this opportunity. If any of you are interested, please leave your contact details in the comments. We'll contact you and we'll fix the schedule of the training and schedule of the course for you. So I would request you to not miss this opportunity and take this opportunity and contact us. Thank you very much. We'll be back with more contents in future. Thank you.